Good day, I'm Adrian Meager, Chief Investment Officer of OIM Investment Management. And today I want to spend a bit of time chatting to you about the emotional roller coaster of investing. Markets go through different cycles that will create different psychological effects to those investors that participate. At the top of the investment cycle, they feel exuberance and euphoria about the returns they are achieving. However, this is usually followed by a sense of fear and despair when the cycle begins to decline, with returns slowly beginning to decline. Why does this emotional roller coaster happen as an investor? Simply it's because most investors do not understand the risks associated with investing and are therefore subject to their emotions, with fear and greed causing them to sell low and buy high. Emotions often cloud our decision making and prevent us from acting in a rational way. However, by understanding the range of emotions we experience as investors and the way it affects our decision making can help tame the emotions that are a roller coaster of investing. There are 14 stages in this investment roller coaster, and I'm going to take you through all of them now. So the first one is optimism. Investors have a positive outlook for the market, leading to an investment being made. Second, excitement. The initial value of the investment increases, and they have complete confidence with this confidence, and then could actually add more money to the investment. Number 3 is thrill. The investment value continues to go up, and we start to feel very clever with our investment decisions. Euphoria. This is the point of maximum financial risk, as investors enjoy strong portfolio gains and begin to ignore the risks associated with investing. 5, anxiety. The market pulls back a bit with the investment value declining, and investors remind themselves they are long-term investors. 6 is denial. Markets continue to decline, and we consider selling. However, we hope for a short-term improvement in values. The next is fear. This is the normal reaction to the investment value declining, and they believe their investment value will never increase in value again. 8, desperation. Investors start to look for any solution to try reverse the investment losses. Next, we move to panic. Investors are now clueless and feel completely helpless, believing the only solution is to sell the investment in panic and therefore lock in these capital losses. 10, capitulation. After selling their investment, they wonder why they invested and did not sell sooner. Moving now to number 11, despondency. Investors decide to never invest again, as investing is just not for them. This is often the moment of greatest financial opportunity for a new investment. Depression. Investors start to analyze what went wrong and ask why they even invested in the first place. 13 is hope. Investors ask if the market is beginning to stabilize, and they start to realize that markets move in cycles. An investor may start now looking at a new investment. 14, relief. They make the new investment, turns positive again, and they regain their faith in investing as markets recover further. We're now back where we started, optimism, and our emotions have gone through the full investment cycle. The emotional roller coaster of investing is an unavoidable part of the journey. Markets will rise and fall, and with them, emotions will swing from excitement to anxiety. But those who cultivate patience, discipline, and a long-term mindset can navigate these ups and downs with resilience. Successful investors understand that fear and greed must be managed, not eliminated. They stick to their strategies, avoid impulsive decisions, and learn from both their wins and losses. While investing can test emotions, it also rewards those who stay the course. In the end, investing isn't just about growing wealth, it's about growing wisdom. Learning to ride the waves with confidence makes all the difference. We should rather understand the emotional experience and how we react to each stage as an attempt to tame the emotional roller coaster called investing. So remember, when the market goes down next time, don't overreact, because it will surely go back up. Until next time, goodbye.